Hi there, welcome to my YouTube channel. So today I'm going to talk about the small cap fund. So what's been happening is that you would notice that a lot of people play around with the larger cap stocks, but recently or lately over the last few years, a lot of investors are betting huge on the small cap funds and even the ETFs and all of that. And some investors are investing in mutual funds. So, well, that's been happening for a long time now. So I thought I will, in this particular video, talk about three factors that you should look at before you invest in small cap funds, because there are certain aspects that you should keep in mind before you should invest in these stocks. So I'm going to talk about all of that today. So before I do that, please like my videos, please subscribe to my channel, please smash that notification bell. Also comment on my videos and share my videos with people who you think would benefit from my knowledge, from my research, and from my videos. So before much ado, let's begin. So first, my ebook. Yes, all of you know that I do have an ebook, which is essentially on my journey as an entrepreneur. After I quit my six-figure globetrotting corporate job. The book is titled Six-Figure Corporate Job to Master Entrepreneur. I've spoken of the challenges and how I, actually made these challenges go away, and then I was able to, start two companies, one in Singapore and one in India, and then I expanded to the North American market with representations there, and I do intend to have a proper, entity registered in the U.S. market as well very soon. So this particular ebook has three worksheets, essentially, kind of questions that that an entrepreneur should ask before he ventures into the world of entrepreneurship. So you could score yourself and you would see where you stand, how close or far you are from becoming an entrepreneur. The cool thing is I scored myself, and you would see my score in the ebook. The ebook is available on my website. The URL is flashing on the screen. I'll put that in the description box below. All you have to do is to, after you click and go there, you put down your name and email address, and the ebook, the link to download the ebook will be emailed to your inbox. I hope you like the ebook. Please comment on that as well. Now let's talk on the topic. So let's try and understand, what are small cap funds. First, small cap stocks or funds are the stocks of publicly traded companies that have a market capitalization of less than 5,000 crore rupees in India, or between 300 million to $2 billion in the US. So that's the basic definition of small caps. These companies are more volatile and vulnerable to losses during downtime in the market, as they are young and the companies seek to expand aggressively. Hence, they spend a lot of money and they could potentially run out of money. However, small cap funds are suitable for those who are willing to take high risks, risk takers, and also know when to exit the market. So when to enter and when to exit the market are, very key to these kinds of funds or stocks. Decision to invest in small caps at this stage should not be based on playing momentum or by the fear of missing out, FOMO. So it's all must be done judiciously with proper research and looking at the financials. It's not like cryptocurrencies where someone tweets and you go ahead and buy those crypto coins. No. So what are the benefits or advantages of investing in small cap funds? First, exponential growth potential. Yes, because they can go up manyfold, and hence high return, but of course high risk as well, and low price point to entry. So it means you don't have to pay that much that you pay for a large cap to buy a stock, a small cap stock. So those are the two big advantages of small caps. Now let's look at the challenges, or what you should look at, those 3 pointers that you should look at. First, the risk profile of the investor. So like I said, if you are a seasoned investor and you know when to enter and when to exit, then you should look at investing in small caps. So you must ensure that you know the timing. The timing is absolutely correct, and you should also be ready to lose out on if you make a mistake, or if you fail to exit at the right time. So that's point number one. By the way, the header of the slide is wrong. Is the previous slide. So I forgot to change this header. Second point, checking track record. So like any other stock or any other company you want to invest in, you must check the track record. Keep a track on the records of the past performances of that company. Because unless you do that, you wouldn't know where this company is heading, or whether they will be able to make it, out of the, if they spend too much, they will go bankrupt. They will have to, so all your monies would be lost. So potentially. So you must do the due diligence in terms of doing a check on these stocks. And the third point is investing through the SIP mode. So what can happen is, although timing is great, but you also have to understand that the investment plan must be correct. So SIPs allow you to diversify the stocks, so you could put it into multiple stocks, so that you could hedge, or you would invest with a lower risk. So something very similar to what mutual funds do. So you would invest in a multiple set of stocks, a basket of stocks, so that even if 1 or 2 or 3 or 4 of those stocks go down, your net is on the positive, and hence you continue to derive benefits from those from these stocks which are there in the fund. So that's why SIP route is very, very crucial. Even if you are not a seasoned investor and you invest through this route, you could potentially be on safe waters, because there would be a fund manager who would be managing these funds. Having said that, there are other negatives of mutual funds. I don't want to talk about it in this particular video. I will probably take another video on that and talk about that. But to summarize, you have to look at the risk profile of you as an investor. How easy, how open are you to taking risk? How much are you putting in into small caps? I would suggest that you shouldn't put in more than 10% of your total investment portfolio. You should always do background check of the companies, how well they are doing, what have been their past performances, the financial ratios and numbers and all of that, and what's their future, what are they heading to, where are they heading towards, and all of that. Investing through SIPs, like I said, is a great way to somehow reduce the risk that you may have when you invest in small caps. So you invest through most probably a mutual fund. So these are the the 3 aspects or factors that you should consider before you should invest in a small cap fund. So that's what I had today. I thought I should share this with you. Yesterday I did a video on subscribing to IPOs. I'll put that on the card above, the video on the card above. Take a look at it. I hope the video will be useful to you. So, well, thank you very much. Thank you for listening to me. As you know, my name is Saurav Mukherjee. I'm a digital technology marketing leader with over 20 years of global experience. You will find my LinkedIn URL in the description box below. I work with companies to try and solve their business, marketing, technological, and investment challenges. If you want to engage me as your consultant, please drop me a line on LinkedIn message after you connected with me, or you could write to me on the contact page of my website. I will put the URL to that page in the description box below. Then we can get into a conference call and see how we can work together. So before I end, as usual, please like my videos, please subscribe to my channel, please smash that notification bell, please comment on my videos, and also share my videos with people who you think would benefit from my research and from my videos. So until my next video, please stay safe and stay healthy. Take care. Bye-bye.